The Coca Cola Company is one of the most famous dividend payers and is a member of the Dividend Kings list, which means it has increased its dividend for over 50 years. They just announced their latest results, and in this video, we will see how the beverage giant did in the last quarter. So, what exactly went down? Let's break it into three key areas: earnings estimates, global growth, and what the future holds for the company. So, Coca-Cola delivered an EPS, or earnings per share, of 72 cents, exceeding analyst expectations by 2 cents. That might seem like a small difference, but in the world of investing, it represents a positive beat, which is always what companies strive for. But the good news doesn't stop here. Revenue also surpassed estimates by 330 million, reaching a total of 11.3 billion, which is up 2.7%. This tells us that Coca-Cola is selling more drinks and at a healthy price point too. Here's where things get interesting. How are they achieving this growth? Coca-Cola's success can be attributed to a well-crafted recipe of strategies. One key ingredient is their ability to effectively implement price and product mix changes. They grew their organic revenues 11% and were able to implement 13% price mix growth in markets where there was significant currency debasement. Another crucial element is their focus on innovation. Coca-Cola is constantly developing new products and expanding its portfolio to cater to evolving consumer preferences. Now, let's take a closer look at the regional breakdown of Coca-Cola's impressive growth. Latin America takes the gold medal with a staggering 10% revenue growth. This can be attributed to factors like a growing middle class, rising disposable income, and Coca-Cola's established brand presence in the area. There was also the contribution of high inflation in the region, of course, but the management confirmed the strength of the portfolio nonetheless. Even North America, a mature market for Coca-Cola, surprised some with a respectable 7% growth. This demonstrates the enduring strength of the brand and its ability to maintain relevance in a competitive landscape. It's important to remember that Coca-Cola's success isn't just about the product itself. Their massive distribution network plays a crucial role in getting their beverages into the hands of consumers worldwide. This includes a network of bottlers, distributors, and retailers who ensure Coca-Cola products are readily available in supermarkets, convenience stores, and even remote villages. I will never forget when I went on a trip in Georgia in the Caucasus, and we traveled for 5 hours on this narrow road going deeper and deeper into the mountains. At one point, we stopped at a remote village for a break. I wasn't even sure if there were people there or if it was abandoned, but I saw a shop, so I decided to enter there, and what did my eyes see? The first product next to the door was, of course, Coca-Cola. And then the next summer, I went to the mountains in Montenegro, and while we were going up a hill, we saw a building with benches ahead, so we decided to take a rest. Lo and behold, a woman came out of the building to offer us cheese, which she was making from her cows, and, you guessed it, cans of Coca-Cola immersed in cold water. So when you hear that this product is everywhere, it literally means that it is everywhere, probably outside of North Korea. Alright, let's continue with the report. Encouraged by their strong Q1 performance, Coca-Cola is raising its full-year outlook. They are now expecting organic revenue growth to land between 8% and 9%. That reflects their confidence in continued global demand. Of course, there are always challenges. Currency fluctuations can impact the company's bottom line. Coca-Cola acknowledges this and has factored in a potential currency headwind of 4% to 5% on their comparable net revenues. They also upped their guidance for currency-neutral EPS growth, expecting it to fall within the range of 11 to 13%. This revised guidance suggests they're proactively managing costs and expenses while still delivering strong earnings growth for shareholders. Coca-Cola's Q1 earnings report had a lot of positive news. They beat estimates, showcased impressive global growth, and raised their outlook for the year. However, it's important to remember that the market is dynamic. While Coca-Cola's future looks bright based on that report, there are always potential challenges like inflation or changes in consumer preferences. Here are some additional points to consider that go beyond the initial hype of the earnings report. First, the impact of rising input costs. We always have to remember as investors that the fact that there is inflation doesn't automatically mean that companies will be able to effectively raise their price. Coca-Cola needs to continue to effectively pass on cost increases to consumers without hurting demand. Second, the evolving beverage landscape. How will Coca-Cola adapt to changing consumer preferences, particularly the growing demand for healthier options? Consumers are increasingly seeking low sugar, low calories, and organic beverages. Will Coca-Cola be able to innovate and maintain its market share in this space? This is something that needs to be followed by investors. Third, the sustainability challenge. Some consumers are becoming more environmentally conscious. How is Coca-Cola addressing its plastic waste, footprint, and water usage? This is a complex issue with no easy answers, but Coca-Cola will need to demonstrate a strong commitment to sustainability to maintain a positive brand image, especially in the eyes of younger consumers. And fourth, how will global instability and trade tensions impact Coca-Cola's operations in certain regions? Political and economic uncertainties can disrupt supply chains and hurt consumer spending. Coca-Cola's diversified global presence can be both a strength and a weakness in this regard, especially with so many hotspots in the world right now. By considering these additional factors, we gain a more nuanced understanding of Coca-Cola's position. While the Q1 report is undeniably positive, there are challenges on the horizon. Investors should be aware of these potential roadblocks and how Coca-Cola plans to navigate them. Coca-Cola's Q1 earnings report is a positive sign for the company and the broader beverage industry. It highlights the enduring strength of their brand portfolio and their ability to adapt to a global market. However, a well-rounded understanding requires acknowledging potential challenges and areas for improvement, which I hope I was able to do for you in this report. If you would like to see another report, which is of my 4 top stocks and ETFs for the current environment we are in, go to the link in the description and I will send it to your email address for free. And before you go, make sure to check this video that should have appeared on your screen to continue with your investing education. Read important disclaimers in the description, and I'll see you in the next one.